Good morning, traders. Today is Wednesday, November 2nd, 2022. Your morning stock market analysis. As we all know, it is FOMC day. And the outlook for today most definitely is FOMC dependent this afternoon at 2 when the rate hike is announced. Expected 75 basis points. But more importantly, I believe it's going to be between 2:30 p.m. and 3 p.m. Eastern Time. That's going to be the most critical time. Okay, so let's get into it. Today I'm going to show you um, not reasons for pause or pivot, but some considerations, some factors that perhaps might, I say that might impact Jay Powell's verbiage in his press conference starting at 2:30 today. Okay, as of right now, the markets are basically flattish. There are your futures. Um, Nothing really going on there. I'm going to show you just a little bit, and then I'll show you some of the charts, and then I'm going to show you some interesting political um, factors that are going into this afternoon. Okay. So as you see here, there is the 1 minute, the 5, the 30, and the 65 chart. Nothing significant. In fact, it's slightly down, as you see here. It's below the on the 5 minute chart on the EMA 50. Actually, on all the charts, they're below the EMA 50, slightly below, holding at that support line that it found yesterday. Is just hanging out. Okay, so I think today is just going to be a flattish range, maybe even slightly down. Okay. Now, that's not necessarily bad. I'm going to show you that in another chart in a moment. But looking at the 195-minute chart here for the markets to the far right, again, it's just hanging right there at this green resistance line that I have set. Okay. So now, this is a here's an example of every time it goes, it's been going down, it pops back up. Okay. When it goes down, it pops back up. This is the October 13th. When it goes down, it pops back up, down, up. Okay. So far, we could say they are making higher lows. This is higher than that, is higher than that, is higher than that. Okay. Now, let's jump over and here's the MACD. That is higher than that, is higher. Well, actually, that's a little bit lower than that. But this is higher than that. So let's jump on over to the here we go, Nasdaq Futures. Okay, this is the 4 hour chart. The top here is, let's see if I can get that other. The top, October 16th. Oh, I'm sorry. I need to zoom out. Here we go. Here we go. October 16th. I needed to zoom out. Okay, see how the line here's through today. Look at that. Bouncing off the line perfectly without fail. So don't be surprised if today's slightly down or if we're just flat. Okay. Now, what I want to call your attention to is look at this is the 4 hour chart. Look at the MACD relative to the zero line here. Up, up. It's getting higher. Okay. When you contrast that with this massive downtrend, yeah, here we go. That was just down, down, up, down, down, well below the zero line. Okay, that's where I'm calling attention to. So, you know, higher lows, that's coming down, and that's potentially going to pivot and make a higher low. Potentially, I say, on the 4 hour. Okay. Obviously, that depends on today's FOMC. So, but the encouraging sign is we are at or near zero. That's where you need to be. Okay. Not way down here, like, like we've been having from August through October, basically, right? Way down here, way down here, way down here. That's why all those rallies, those counter trend rallies, have failed and failed and failed and failed because of its proximity on the MACD to the zero line on the 4 hour chart. That's why. But as you see now, here's where we are today. It's a totally different ball game, guys. Potentially a different ball game. Okay, let's check out July through August. See that? See how it was close to zero, close to zero, close to zero. We rallied. Okay, so let's see. That's 630, 7-1. Yeah, that was the low here. Yeah, this is the low. Okay, so I wanted to point that out to you. We are going, today is a crossroads type of day. We're either gonna go way up, or I think the fall continues, right? So although we have broken out of this technically, we have broken out, back tested, came up, back tested, and the back. So we've back tested twice, and so far it's holding. So far, right? We have not been able to. Uh, don't want to do that. Okay, here, let me make this a little bit smaller. Since August 16th, up here, we have failed to cross this line, let alone successfully backtest. And just want to draw one more thing. Okay, so you see how we're backtesting now, and we're just hugging the line, you know, like this. So, you know, as I briefly showed earlier, let me just draw this out. You do need the downtrend consolidation or pullback. We can call it pullback. You need pullbacks down, up, down, before you can go up, before you can keep going. As I've been mentioning, in my um, on the 5 minute charts, you remember how it says it's got to go up, it's got to back test. That's the down. Successfully back test before it can continue to go up, right? As I said on the 5 minute charts, it must close 5 minute candles above the support line from which you are backtesting in order for the uptrend to continue. So that's as of right now. So here it is, up, backtest, up. But this is a key resistance line. So it's backtesting, and now it's hovering down here, holding. So basically, if this were a 5 minute chart, let me just draw that line right there. Just pretend that's the resistance line. Well, actually, we don't have to pretend it is. It tried once, it tried twice, and today, I believe it's going to try the third and final time. Third time's a charm, or it's not. I don't know. We'll see. Okay? So, I want to show you a couple more things that may be influencing that I mentioned at the beginning of this video. This is from CNBC. Dollar falls as investors see slower pace from December. Rate hikes. Slower pace. That's what investors are hoping for. They already expect the 75 basis point today. That's in the bag. That's been priced in. They want to look at December and beyond. Slower pace? Is that the sense of a pivot or a pause? We'll see. Now, I also want to show you this. This letter is from Senator John Hickenlooper out of Colorado, Democrat out of Colorado. He sent this letter to Jay Powell, urging him to consider pausing and seriously consider the negative consequences of again raising rates. Okay, see what he says, at the bottom. Uh, the Nobel winning prize economist said, will raising rates lead to more oil, lower prices of oil, food, lower prices of food? The answer is clearly not. Okay, so feel free to, you can actually find this on Google. You know, if you want to read the whole letter, I just wanted to bring this to your attention. Also, Senator Sherrod Brown, chairman of the Banking, Housing, and Urban Affairs Committee in the Senate, sent Jay Powell a letter. You must not lose sight of your responsibility to ensure we have full employment. Remember, that's the dual mandate of the Fed, along with price stability and moderating long-term interest rates, full employment. Okay, so you know he's just saying that family pocketbooks needs have little to do with interest rates, and potential job losses brought by any monetary over tightening will only worsen these matters for the working class. So I bring these two letters as an example from the Senate. It is the Senate who appoints Fed chair, the Fed chair, in this case, Jay Powell. It is also the Senate, but also all of Congress, who can potentially defang the Fed if it so chooses. If it thinks the Fed is going too far, it can strip those powers. I'm not saying this is going to happen tomorrow, and I'm not saying it's going to happen this year. Uh, I'm just saying that they do have influence on Jay Powell. He cannot just ignore them because when his term is up for reappointment, can choose to not reappoint him and or pass legislation that significantly curtails the Fed's powers in the future. Okay, so that is all I have for you guys today. Good luck trading, and if you do plan on trading, well, I want to say for one more thing. You know, everything that I showed you here today, whether it's the senators' letters, or the CNBC article, that's all just something to keep in the back of your mind. Don't don't factor that in to your decision to trade this afternoon's FOMC or not. Trade strictly on technicals. And this video that I have that I posted a couple of days ago is based purely on technicals. So I recommend you watch that if you intend on trading this afternoon. All right. Okay. I will talk to you guys again soon. Let the fireworks fly.